Okay, I had to stop. Had to stop and make sure that it was being recorded correctly. Was going in too deep before I even saw the recording. Okay, so this is going into the high, into the close, right? Boom, hit the high, right? Into the close, look what we hit, right? Now the fact that we hit up here, I'm gonna cancel these off. We don't really care about this anymore. None of that matters. What matters is this, the close, right? The close always matters. You're always gonna hear that, into the close, wherever people say, you know. I'm not gonna bring up other people into it. And we're gonna take the high, low, whatever's closed. You know, this is 1630 down here, so we're gonna take the high, low candles, right? This is why I said this was a sell, because of this. And I ain't spot this gap that they did, but I failed to realize this gap because I set up just like this. I didn't trade that previous day. I didn't trade this previous day. Oh no, I did get this. I didn't set up right, which had me mad. And I want to show you why this is important, to actually look at this setup. Not necessarily have all this on there, but look at the setup. This market went into 22, you know, Asia, London, all same, touched each other, went inside each other, whatever you want to call it, traded at certain prices. Now we're going to take the low from this candle and then this high. Yeah, when the market closed. This is a gap. This is literally a gap. And this isn't like a price gap. This is saying that we should have pulled back before we made this move. So market makers got involved in this, and literally right here is kind of saying that they're selling. Let's see where overall picture lays at right there, and that area, the overall picture lays where, and then you'll see it. Look where that overall picture lays at, the high where they sold off from, the 2 p.m. high. So realistically, this was probably them, everybody selling the high of that 2 p.m. and market makers getting involved in squeezing, because you see that move up is exaggerated move up. To squeeze up doesn't matter. The overall picture where we lay doesn't matter that much because we're not trading that. We're not trading that at all. What are we trading? We're trading this 2 p.m. So at the same time, look, they got above this high right here where they were selling it. We got above it. They boom, ram it up, hit the high of 32 on the dot, right? Now, take for granted, we have not hit this halfback. We hit the high, haven't hit the halfback. So now they have this gap here, which I didn't realize they had this gap. Which now we got the next day 2 p.m. right? Next day 2 p.m. we got a high. I want you to look at this steady. This is very important. All right. We got our 2 p.m. high low. Couldn't get above halfback. Now we have another halfback that hasn't been touched. Right? This was our first go into Friday. This is organized. So remember that, you know, they know what they're doing. This gap right here, you see all this line was the Feds. This is a 26, as I displayed in that chart before. 26, that's the halfback in New York. Not touched, right? Remember, we're below, couldn't get above this. Couldn't hold it. Boom, into the close, they held it. Look where it ran up to. Look where we ran up to. Boom, right dead center, 41. 2 p.m. range is your play chart. Are we breaking out? Okay. Well, we have 2 areas that we haven't touched. Let's get rid of these, right? We got our move up, right? Let's do our 2 p.m. range here. I don't want to get rid of this. I just want to make this smaller. Remember, we haven't pulled to a halfback of New York forever. When we pull back to a halfback, that's a halfback on a candle on the yearly. When we're doing this 2 p.m. pullback, it's literally 1/3 of the candle, the high end of the candle. It's not halfback of it unless the day is just a small day. And that's what's wrong with the range. That they're literally dojis. When they produce like a small tiny day, it's just a doji. And that's why I say it's not really worth trading to be trading a doji. Your range is like 12 points, 12 to 20 points. I mean, you have to take less risk, put it that way. If you're going with 7 contracts, you're wrong. The higher the range reflects how many contracts you're going to take, how much you risk, and how much you manage it. Because if you guys are still buying at the highs, this thing pulls back 5 points, it's going to stop you out. If it pulls back 7 points, it's going to stop you up. If you're buying the highs. Oh, it's breaking out. I'm buying right here. It's going all the way up here. Look where you're buying. You bought up here, right? Bought above the high, 30, right? Pull back. The win is 16. That's 15 points, like about 15 points. And then it carries on to the highs. And you're like, darn. What happened? Now, let me just adjust that, though. Now, if this does work, right? Say you did buy this high, right? Okay, you bought at the high. You got a mini at the high. Dag, I messed up. I thought it was going to take off. Look, it's getting above the Stangum line, whatever. Blah, blah, blah. I pulled back. You have to buy down here again. You have to buy down here somewhere. If you see the gap, you got to buy down here. I'm not doing it. I haven't done this. I have bought at the gap to take it to the highs and then just take profit into this. Past 11 o'clock, we're not below this gap. And you see we're above halfback in New York, which I always say wait for a halfback in New York. If we get above it, which they pushed here, this is tough because this is into the close and the range was real tight. But they were buying down here. And they got their target going into Asia. This is the next day play. And like I said the other day, I was like, somebody asked me, oh, where's it headed? I said, it's probably going 41. Because the chart wasn't released this day. It was released on this day. So they all bought into it. They did the big squeeze up, right? Got to the target. We hit 3 pushes. I think I put it in there. We had 3 pushes. Okay, so this is our 3 pushes here. I think I put the chart up about this 3 pushes. We have 1, 2, 3. 3 pushes. 1, 2, 3. We need a pullback, and that's the pullback. This is organized. It's before we used to say that it used to be a concept of, and I think I put in the chart that if we hold 75, we're going to go to the 100 and then 100 to 125, which literally does it kind of sort of. And then from 25, it'll go to 50. The areas. Like right here, we have 41. Now, it's all based on the range that it gives you. It's the range. This is the range that it gives you. So it's equal to the same amount based on the range. Now, could it have gone to 25 on this push? Maybe, and that, it gives you a broader thing. This gives you exact. So this is exact where they're headed. Exact where they're headed. Exact where they're headed. Exact where they're headed. Where they pulling back to. So you could trade it as is, but the setup is very important. 2 p.m. is very, very important. All right. So let's look at what they did. Came up here, What is? Let's just discuss what this zone is. This is the sell zone. This isn't the buy zone. So they're selling, but there's conflicting issues with this drop and then buy. So sell zone, they sold it, went back to halfback. Sell zone, they sold it, it didn't get back to halfback at all. Didn't get back to a halfback. I was expecting this halfback that day. Expecting gap. Not happening, right? Where they take it to the high. Were you expecting this halfback? Now, hit the halfback and fell from it. Now, the overall picture displays something else that will show you this, but realistically, we came from this halfback, came to the high, right? But we haven't found support anywhere, and we had this gap that we had to close. And let's go into this day, right? Every other time they've been buying Asia lows, or London halfback, and then taking it high, right? Lows, high, halfback, right? Let's do this day. Let's start off as we did. Sorry, you know what? Let's not look at this halfback. Let's look at this halfback. I'm sorry. See, that's where you lose what you're doing. Go off topic. We got the high. We got our closing range. Boom. High, low, halfback, right? There's a big difference between this play and what happened the prior day. Boom. So we had our 1, 2, 3, right? They were waiting on the feds on the 3rd to see what they did. This is the area where the bonds, right? They waited on the feds to see what they do. If not, they're going to drop the market, right? They put their little areas to purchase. 1, 2, 3, boom. Hit the high right here. We're in the sell zone. 1, 2, 3, and we got targets. They gapped it up, held the gap, right? How do we know they're gonna sell that, right? We don't. We don't know they're gonna sell that, but all we can do is set up, right? So let's set up. Let's set up like every other day. This is why the setup works. This is literally not as complicated as it looks. And realistically, the prior day they were selling as well. This day they were selling, and I'll show you why this day. Let's actually go back to this day. Why every market was kind of selling down to this area, but I see the gap. But I think they wanted the same price. Right, they were buying. We don't know. We know that area right there is very crucial. But this prior day gap happened before the market closed. So this is like a stronger gap. This is like people are vested from London. I mean from New York. Before New York and London closed, you know, this is them holding up the market. But this is a prior day gap. If it happened at the start of this market, then it's a weaker gap, which they'll look to close it, like they kind of try to do on Friday. All right, so held it. Realistically, this was still buying because they were buying the lows of London, and then they pushed it up to the highs. And this is the close. So no matter how much we looked at it, they held. I didn't see the gap. I was calling for downplay. Look, sold. London sold where they should have sold. New York was buying where they should have bought. New York was buying this lows to get where? To this high. New York closes. We're above halfback around here. We take high low. Halfback's right here. They flipped it right here. But with that gap, they never sold it. Everybody's looking to close that gap, or we're buying at the gap, waiting, anticipating the Feds. As soon as the chart came out, everybody bought into it. We hit our high. We hit our third high right here. Hit the third high. They left these down here, created the trap. Trap created, right? And then let's see where they sold. So where you know that they sold? You got our end of day, Asia that took it higher. Took it higher, right? How do we know they start selling? Everybody sold that high. Never traded above that high, right? London open. London low. Never traded above this high. Oh, this is the day they held, which I thought it was going to tank. They reported the chart at the end of this day right here. No, this is today. This was a Thursday going into Friday. Thursday. No. This is Friday. Okay. So this is indication though. They got back to halfback, I guess, right here. Boom, halfback. That was the trade that day, to sell to that halfback. Okay. See a progression as it starts to roll. We're starting to move downward into areas that hasn't hit. Now we're below this high again. All right, let's go back into it. The range is really tight. As it starts to shift and make a bigger range, that's where you're gonna experience regardless. But you gotta set up in order to see this. You got our 8. We got our 11 o'clock. We hit a halfback, so possibly going to New York sell area. They bought halfback. We didn't really go see this high at all. In fact, we couldn't get past that halfback right there. But on the daily, New York is buying where? They're buying Asia's low. They're buying London's low right here. Now, if we were not broke above this high right here, which we didn't even go see these highs, that's an indication that we're setting up for a turn right here. You start seeing the market turn. Start seeing the market turn. We barely got to the highs of this. They were buying where they were supposed to buy, but it still hasn't turned because we're not below halfback, right? That's going into Thursday, right? Let's do it next day. No high hit. We're gonna do Thursday. Boom. Smaller range, I think. Yeah, smaller range. Which this is really tight range. We're getting tight, right? See the progression as it starts going into the opposite direction. Boom. Tight range. We got our 3 pushes concept. We got our high. got a low. That's why I say that this is the most important levels. Are we breaking above any highs? Let's go back. Let's go back and see all these highs. If we broke above all these highs, we're breaking out, right? Broke above this high, we're breaking out, right? Broke above this high, we're breaking out, right? Remember, this was probably them selling into this move up, taking profit, taking money. Let's get rid of all these days and let's just keep the excuse me. Let's get rid of all these days. This is the day that didn't hit the halfback. These are halfbacks not hit. This is fair price. This is fair price. This doesn't matter. They pushed 3 times. Get rid of this. That day they bought the lows. Now, when we look at a day like this, ending with this whole scenario, the progression of it is that it starts flipping. You got a high low. Now this, as you see it, is kind of, this whole scenario becomes so small that you're gonna see this as New York. You know how I say New York is the breakout? That is the breakout for New York. When we get that tight into a range, that this is literally a small range for a whole day trade, and that's what you want to see, that the range gets tighter and we're not making new highs. So look, what we do, we double top up here. We never, this is the third high double topping. What we doing here? Rejecting here at this high, right? Look what we did here. Came back to this high. So came to this low, came back up to this high. So now if we keep on going down, it's going to progress that way. We'll set up for that day, but this is just to see. This is a little bit complicated because it looks complicated on the chart, but it's understanding what it's doing. Let's get rid of all that because that doesn't really matter. What matters is that we went to fair price right here and it got bought up. This is the 2 p.m. right? 2 p.m. matters. Why? Because we hit the high. We never pulled back from it. The pullback was the most important thing, that we hit it and we never pulled back. So here they finaged it to do that. They set the trap, held price up, waited for the Feds. Fed chart shows up. People get involved. People say, hey, we're going to the moon because of the Fed chart. They pull it back. They trap them. Trap the sellers. Trap the buyers. Sell into them and then buy up, because all the sellers are like, it's going to tank, and it's really just going to where it should be. Now we got all these boxes, don't matter. So when you can get rid of this. You don't need to keep all this on. You don't need to keep these highs, lows. That's just for the day. But let's go into this day. Let's work on this day itself. This is Friday, right? And it's very important because gap has to be addressed, right? Gap has to be completely closed. Somebody asked me, is this gap closed once we trade into it? No. It's not closed just trading into it. It's not like a price gap. This is market makers holding price up. So they have to sell out their positions. As you see, people were buying where they were buying. For it to be sold off, we have to close below like this. So they got done with their position. They dumped, and look how it went straight down, straight to the high, and went through. That means that their order is out of there. Boom. They're not holding that market anymore. So that is gone. You don't have to keep that on the chart. It is important to keep because that's the day. That's the 26th, right? This is the anticipation of that Fed market. So that's the Feds. I think I have it on the other chart, so I don't need it here. I might not, but it reflects pretty good on a weekly chart to see what it was or what area it was, and I showed it this week of that. So let's go on to going into this Friday, what they did and why they did it. And it literally, they do this a lot. If you go back on the charts, they do it a lot. Unfortunately, 30 minutes, I can only go through the charts that we had this year because it only goes up to like 180 days. But I've been doing 180 days prior to even come back with the chat. And I think I sent them all to Ricky, but it's very amazing what they do with the market. And then, finding that the Fed's put in money and then it sells off like that, you see literally all that going on at the same time in the chart. What they're anticipating, what they get, it's all over the chart. To tell you the truth, on all the charts, all over from when they started doing it in October. When they put in money, I have all that jotted down on the chart, reflecting the Fed chart, and you see the gaps everywhere. Anyway, let's continue. This is the end of day, right? Like I said, it's gonna be. It was a tight range, right? Let's just do a bottom side, let's do a top side as well. We already had made our 3 pushes. We had our low. We had hit our halfback. If we hit our halfback right here, we should have gone to this high, right? We didn't do that. We didn't even go to this high neither. So that's kind of telling you that, wait, we can't make a new high. We're not making new highs. Okay, let's go into Asia. I think this is when the chart printed. No, this is when the chart printed. Asia was low. They boosted it up. Let's see. Let's set up for Asia right here. Let's kick in this chart as well. That's the one that we need right now. Because you want to use the overall range that we're at to see what they're doing as well. We held the low, went to the high, right? This is the area I kind of said that, we go above 41, this thing going to take off. I don't think it's going to stop because we had all this to go. So, you can't predict any of this stuff. You can only trade it as what it's doing. Just taking concept what we're doing now. That gap could have held. We could have gone all the way to the highs. But when it's trading and what they're doing is literally at the time. So indicators will not work, doing this because these little traps that they set are literally profit taking, which you can't predict, or no indicator is going to tell you to buy or sell depending on what area they're at. And what you want to do is break down the market for right here. This candle is very important too. Is it that one? Yeah. No, not that one. This candle is very important. Now let's show you why. That candle goes through his low. And as you see it, when we go through that low, we're literally going to halfback. Like, we're going to halfback, we're going to go challenge this low. Which was it looked like it was going to do that the other day with the gap, but I didn't see a gap until it was too late. So here goes 8 o'clock opening, right? The big difference between that 8 o'clock and this 8 o'clock. Big difference. They created this gap right here with that candle. That candle right there created that gap, keeping this market from that market. So until we traded above here, this was not going. This And the concept of it was literally the 3 pushes, the lower highs, you know, everything was working out in that sense. We had halfbacks, we had a gap that we had to address, we had the trap for the bulls, and this is the trap for the sellers. Let's take it into concept, right? If we break below this low, we're going to make a new low, right? This doesn't necessarily mean it's I mean, you could take it as this. We just did a high, a low right here on the overall picture, and we're filling halfback. So that's kind of dangerous as well. So the overall picture does look bad. We're back in the zone of that 2 p.m. candle. So we could possibly be making our way down because this was a false breakout. Going into earnings, that could possibly be it right there. But as you see, they sold into here. Now, how do we know they broke out? We already see that if we break below here, they're breaking out, period. Now, this might be a little bit off. I think it was 28, but let's take the high-low of this candle right here. As it goes through these levels, these are your risk, right? So, say I'm selling at this high right here, right? I'm selling with them, right? I want that price. I want this high of this market. They're selling right here. This is almost the same thing as that buy, but it has more of a sense to give up to the downside, unlike this day that they're just buying off that low. Because the problem with buying here, right, that we're at the highs. So this is very dangerous. You know, this is very dangerous. This thing fell. We could have literally gone down here, which I think I pointed down that we'll probably come back down here and chill at this halfback, right? So buying into there to me isn't a play, but London was down there. It was in the buy zone. They held it up. We had hit the high. We should have pulled back. So, you know, that whole concept to me was, all right, let me just sell into this. And that's why I kept selling the highs, right? If we were took out this high, I would have had to get out that play. I was selling and I didn't see this gap until it was too late. Luckily, like, I think people ask me, like, oh, how do you trade this? I said, well, I took it long and I sold into it. But I didn't see this gap until earlier on. I got lucky. Because this could have happened, you know, they could take it all the way to the highs and you're in the wrong direction, period, because they're buying the lows. They're literally buying Asia lows. They're buying London lows. New York is buying them. We just haven't seen the highs, and it went to the highs. So when I bought here, I was good, but then it came back down. I was like, what's going on? We should have gone up above this high and took off. But look, it did do it. It did what it was supposed to do. The gap was them waiting for the Feds to sell it down. Trap buyers, trap sellers here. I think, you know, and that whole thing is based off of what they're doing. Can we go down more? Yeah. Can we go higher? Yes. But the setup will keep you in that direction of it. Right here, this was the setup to sell. Why? The chart printed. Everybody got what everybody wanted. The market makers got what everybody wanted. They wanted everybody to buy into it. London said, hey, we're selling into it. And if you look at the concept, we went from fib to fib, the overall range, fib to fib, right? Fib to fib, boom, boom, went up to fib. Why are we rejecting up there? I rejected it. That looks like a double top. Double top, higher lows. Remember, we were making higher lows. Boom, boom, broke the trend here. You put a trend line, you're breaking the trend. And we got this gap to address. This gap nobody sees. Only ones that are talking about this is us. This gap nobody sees. All we're talking about is us. But every market touches itself no matter what. Like say that it's going to trade into here. It's going to come back up here. Another thing that happened is that we never hit this halfback. So the further we get away from this halfback, the more this is a a trend change. We will address this halfback, but we have a lot of halfbacks on the downside that we never hit. So realistically, on a yearly chart, if you go back to yearly chart, this is a red candle, and we're trading back into this high. Does that mean that we're tanking all the way down? Absolutely not, because we don't trade the overall chart. We just trade what's going on here. They trade it to where it should go, right? Realistically, it could go all the way up here. All right. So let's go back into this trade right here. We had the high, we had the low, we had the breakout candle right here. Remember what I said? If we come back to this candle, we should not go above it. It's continuation. We had the high. We never even tested the high. And the other day, we were just testing the low, 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 and then went all the way to the high, but never broke out to the top side neither. And that was another key, that we never broke up to the top side. So we got the low, we got the high, right? If you were to sell here, you're using this halfback as your out, or this high. Gets above this high, you're getting the hell out of this. If you're selling into this gap, this halfback gets you out 34, 30, 33. This is 4-point risk. Look at where it's at. Look at the overall picture. This is why you have trend lines. This is the only way that you're going to be able to use a trend line. And any other indicator, if you want to alert, it's not going to work in this concept, because you're going to see this 100 times and it's going to come down here, come up, and then take off, and you're going to be like, what happened? It's not, trading is not that, and they know that you use this. But I mean, look at all the times that you could have bought it. You know, this is a sell, boom, up. This is a sell, boom, up. So yeah, indicator is not going to work here. This is a sell, boom, way up, way up. And you know, you're going to sell against this, but the trend was down, but yet price is going up. But I was just waiting for it to break below so I could sell. Yeah, that's not going to work. I was going to sell here, and it kept going up. So the trend was, but they dumped it. Yeah, that's not trade. It's not trading. You use the trend line situations like this when there's a setup that works. Right here, work. Did it break above it? No. Now, look at where we're at. We're on a 30-minute chart. 30-minute chart, right? If you took a mini here, right, and you had the concept of using this setup to work, and you know that this is how the market operates. If you had an ES contract and you let it go down here, you got a good move. That's 33 at 13. That's how trading should be. Do you get this one? Yeah, possibly. But you work on this one first and get out here. Now, say you want to take this trade up here. This is the breakout. 28. Maybe you're trading here. Look, concept of it is high, low, halfback. Fail, boom, right here, boom. Take the trade into this. This is your risk. 28 will be your risk. It was 28. My fib was a little bit off. Now you're looking for the breakout completely. Have we broken out? No. But the concept of it is, once we break out the negative 2000 of 2 p.m. 2,200 of 2 p.m. That was horrible. Of 2 p.m. we are on a breakout. The same concept for the top side. If we go above the positive 200 of 2 p.m., it's a complete buy. Do not look to sell into it until time. Okay? So let's look at this time thing concept. Or we hit where, you know, this is an organized sell. So, you know, they were looking to get it here and to here. So that's their profit taking, not necessarily a complete sell-off. As you saw, there was no news on Friday. Absolutely no news on Friday. So they were able to sell it off without getting the volume. I think Ricky got on there and said there's barely any volume. Yes, that's where they want to sell it, because the less people are involved in it, the better it is. because if you get too much attention and the news is there, this thing could just continue to go, because it'll add fear into the market. News will add fear into the market, and they know that. So they want to sell on days that there's less news. They want to organize it to sell where they want to take profit to, and then we play the concept from there. Now it has a gap to up here, right, from prior day. So this is our gap. This could be a turning point in the market to come down into earnings. I think earnings starts the 8th or something. I'll post it later. I haven't even looked into it. And then I'll put the dates that each company, the big companies, are reporting. Every other market doesn't matter. But then we got to stay mindful of what the Feds are going to do. If the Feds keep on feeding the money, this could still come down more, and the Feds will keep on feeding into it money. But we'll play it from the setup. Now I'm going to get rid of these, because this doesn't matter now that we hit. This doesn't matter because that was a target. This doesn't matter because of the breakout. So don't keep these things on your chart. You're going to bundle yourself up a chart. I am going to keep this half back, but I'm not going to keep this. Okay, so we're not going to keep that. I should have kept these lines to see where they are on the yearly, so you could see that literally. Or we could just go back and see price, and then let's go to yearly right now. So I'm going to get rid of this right here. Not get rid of it, but just minimize it, and we're going to get rid of this. This gap is gone. This gap stays until we trade above that. We're not bullish, and it's still a point where we should be going. This is our only halfback not hit on the yearly on the top side right now. Only one. Last time we had that and we held, we kept going down. Get rid of all that. We don't need that. We do have things to address on the downside, and going into earnings, it might occur that they'll use it as leverage for the Feds to start decreasing interest rates higher. And it's not really leverage, it's really reality of the overall economy, that they're afraid that most of these companies are not going to survive during long-term interest rates. So they want the Feds to lower down the interest rates faster. They did increase them high, fast, and now they're trying to decrease them faster. And they're telling the Feds that you need to do it now, you need to do it faster than what you're projected, because the first projection is March to reduce the interest rate. So think about it. March is the worst time. September and March are the worst times in the market, period. We have the biggest drops, and we gone up 17%. So this last contract that just flipped over, and options contracts for 6 months, you think they're buying the highs or selling? They're selling. They're selling because we're all the way at the highs. So no matter how much money the Feds put into it, which they're holding, so it's literally like paying the market. That's all the Feds are doing to not crash the market. So realistically, the market could continue to go down. All we are is day traders. The overall picture is just to see it. We can only trade as it is, because if you trade it as, oh my God, the market's coming down right here, look, you got killed for like 2 weeks. Well, yeah, like about 2 weeks, because this was Wednesday and then this is going into Friday. But I mean, who knew? Oh yeah, and then people will say, yeah, we'll return to the drop, but how do we get there? When do we get there? And this is the roadmap to that. This is a roadmap. That's all it is for day traders. Day trading is way different. You just have to set up and a good setup that works. This does work. So now let's do our end of day, and let's do our concept. Because say that, remember, we're hitting positive 200 on the way up. Do we start hitting negative 200 on the way down? And that's what you want to look at. Okay, so let's take our highs, our lows right here, right, 11, right, and let's do our fibs. the market starts pushing down, and we got range to the downside, which pull back up. We're still below everything. We're still below here. We didn't go address that gap. That's very dangerous, right? Does this matter? No. But would you want to be selling these lows? Absolutely not. Why? Because we hit a fair price. So that doesn't matter anymore. We get rid of that, right? If some news comes out and the Fed start putting in money into the market, I'm sure we're going to go higher. As of now, they're trying to break the trend to the downside and start making our move down to earnings. And I'll post that in the chat as well. See here, we got to take this low and we got to take this high. Now, remember, this drop was very straight. There was no entry for it. Look how it's going. So high, low, halfback. Let's see if we keep on going. But this setup will keep us in it. We got a low and high. And we're below halfback. Going into the close. Look at our low down here. Our projected will be to get down here. It's also a low in New York. Can we continue to break out? Or do we come up to the high, test that gap? That's our range. Alright. This is what it's looking like. We're below New York's halfback. And we're below 2 p.m. halfback. Right now, price is headed down here. If it holds here, we're going back up here. And this was a bear trap, and they'll continue to raise price up. The funny thing is that we'll see it. If the Fed start putting money into the market on Tuesday, they report it on Wednesday, I guess. But Tuesday we see price go up. New Year's is Monday. We see price. If we see what they did the other day, where they started doing this move up, anticipating bad earnings, then we know that they're probably going to go and take out that market, right? Take out that high, right? I can't believe I got rid of my things. We can't control what the market does. We can only trade it for what it is doing. There we go, right there. If Tuesday we open up, or Monday night, and you see price going all the way up, we're probably going to go address that high. If Feds don't put any more money into it, or we're breaking this low, which puts us back into this high low, and if you see high, low, halfback rejection, we go down here, we're going right to here. Right here, which will create 3 steps down. So then we expect 3 moves down. Right now we broke one, we should break another, possibly see this one, and then see another one. So come down here, bounce back up a little bit, sell off, or go right through it. Concept is maybe go slow, and then tank, and then do it here as well. Slow, tank, and then we'll come right back to that low, possibly, right? And maybe we get a nice move down into next week. You get a nice move down. They test it down here, and we start addressing some of these halfbacks that we haven't seen. Remember, this is the last time the Feds put money in it. This is a big gap that we have. When they put in the money, everybody bought into it. We should come. This area right here should be the prime area that they should trade into. Same concept. If we go up higher, they put money. It's just going to keep going up higher as well. As of now, though, we did 3 pushes up, sold back down. We're underneath this high. If we can't trade to this high area, then they're going to take profit. They're going to take profit to buy at areas that they have set to buy at. Remember, 17% up going into earnings. So they bought into it. They're going to sell we're at the high, so most possible the possibility of this is that they're gonna sell the highs into the rumor of having bad earnings, and then they're gonna buy it because the Feds will start buying into it, buying more. They'll go with what the Feds are doing. So now they have the opportunity to take profit into them. All right, that's about it. Hopefully it's helpful. I will have a Q&A. I'll set up a ring, and you guys questions. Just give me a date or when you guys want to do it. But that's it for today.